I'm Charlotte McLeod with the Investing News Network, and here today with me is E.B. Tucker, author of the book Why Gold, Why Now, and director at Metal Royalty and Streaming and Nova Royalty. Thanks so much for being here again with me today. Looking forward to speaking with you.
Thanks for having me, Charlotte.
Yeah, of course. And we are now in the very last month of 2021. So, of course, I wanted to bring you on to help us recap what happened this year. I know expectations started off pretty high for gold, and many of the things that were supposed to drive the price higher are still present. So let's kick off by talking about what happened to gold this year. Why haven't we seen the movement that may have been expected?
Well, Charlotte, would you have believed when we finished last year that the number one stock of the year would be AMC movie theaters? I mean, a movie theater chain that is can barely operate because of masking requirements and distancing, so they can't use but half of the seats, and then you can't buy any concessions, too dangerous, and you can't be in there late because the virus comes out after 10, so you have to shut down at 9 or something. Number one stock of the year. Number two stock, used video game store in the strip mall. So anyway, so it's hard to predict these things, but I think what we want to share with people is that there's a little trick that I've done at the end of almost every year of my career, and it's timely because this is happening right now. And the stocks that have had a tough go, that are really good companies, go into what's called tax loss selling. And it's this time of year where people, they sell and they say, well, I've made so much money in Sushi Coin, and I've lost money in this stock, Metallo or something like that. And my advisor says, sell the Metallo, take the loss, and set it against your profits. And so you do that right now because the expert told you. And it's usually bad advice because you're selling with lots of other people that are selling for no good reason. And if you pay attention to this in a stock that you know well, it's an opportunity to get involved. And then you can usually, when that selling's done, which I find is before Christmas, because no one wants to work Christmas to New Year's, you see that come up like a beach ball out of the water. And so I think my point is that when you look and everybody's trying to look around and say, well, what's the next hot tip and all this stuff? Look, I mean, if you've done your homework and you have something that you like, it's quality, and the market hasn't agreed with you this year because it's been distorted with all these different trends that are minute to minute trends. I mean, this is like, what's the hot stock of the day? I mean, remember people used to say, how much should it go up in the year? People say, how much should it go up this morning? It's like you got to get rich quick. And I mean, I don't even mean a few months. I mean, you got to get rich today. I mean, that's the mentality that is pervasive right now. And so if you zoom back and say, well, what do I want to own? Like if the music stopped right now, if the market shut down for a week, what would I be comfortable owning? Forget about like the day-to-day movements. And this is the time of year I like to ask myself that. There will be stocks that I want to own badly. And I've been waiting. And now I can see that people are selling them for no good reason. And I'm very active. So I hope people will really take that in this time of year. It's not something you're going to hear in the mainstream, but I've been doing it for decades.
Yeah, this is very timely advice. And I want to go back to some of the things you mentioned, like what's going on with AMC this year. You've spoken in the past with us about, the war on your wealth and how to win it, which is the part of the title of your book. And I think people are maybe just not feeling that this year. Like they see stocks that are going up, they see crazy investments where you can make money. Do you think that's an attitude that's going to change anytime soon?
Well, it will change. The problem is we don't know when. There will come a time where it won't be acceptable anymore to grow your customer base and not your profits. If you notice all these companies going public, like I love the sweet green salads. I don't know if you've had a sweet green salad, but it's a very average salad, about like what you would expect anywhere, and it's quite expensive. And so you go in there and it feels good. I mean, the place feels nice, and you can get a salad, like a tea and a side item, $25 to $30 US. And they went public. And you read the filing, and they just bleed. They make no money, and they're going to spend the IPO proceeds on robotic salad makers so that they can get rid of some of the employees. And you just think, well, this is crazy. Do I want to own this business? Now, I'm not saying it's a bad business. Of course, for the companies that invested early in this, they've done very, very well. So it would be wrong to say that it's a bad business because they've made money, but it hasn't generated profits. So it hasn't built something that you would want to own if there was a big problem. And that leads me to something I really want people. I don't know if you've noticed, I have a gigantic stack of money, what used to be money, I guess, because it's paper, but sitting next to me. This is 1,800 US dollars, which is the price of an ounce of gold. And the ounce of gold has not changed at all since the 1920s, when a $20 bill got you an ounce of gold. This is actually a gold $20 certificate from the 20s. And so the ounce of gold back then was exactly the same. This is a US Eagle. It was exactly the same ounce, came from the United States, same thing back then. But this is how much money it takes. And this pile will keep growing. It'll just keep getting bigger and bigger and bigger while the ounce of gold stays the same. And in my book, as you know, I'm not really talking about gold. The War Against Your Wealth is not just about go out and buy a bunch of gold, bury it in your yard, and wait for the apocalypse. It's not like that. I'm trying to share with people how I see circumstances developing right now. And if you read that, you don't really need me anymore, because I'm giving you my entire blueprint of how to think. And all of this is playing out like we said in the book. Go to the grocery store, buy groceries, organic groceries, notice the price. Go to the movies. Like, I'm going to go to AMC movie. This is part of why I was making fun of AMC. I love going to the movies, and I'm going to see the new Gucci movie, which I think looks very good. And I'm an Al Pacino fan. And you go in there, it's expensive. It's really expensive. I mean, it's expensive to attend. It's expensive to now. I'm not griping saying I don't have the money to do this. What I'm saying is that everyone knows the price of everything is going up. Everybody knows it. Housewives know it because at the store. FedEx knows it because they just raised the rates, the most they've ever raised rates. Your coffee shop knows it. Employees know it. I mean, across the board, top to bottom, price of everything is going up. And so what do you want to own when the price is going up? And that's why in the book I explain I started royalty companies, because it's the asset that I want to own. As this stack grows bigger, here, this is a couple hundred more. This is very, you can get as many of these as you want. The stack gets taller and taller and taller, and the ounce of gold stays the same. And so with a royalty, what happens is that I get 1%, the company gets 1% of everything that comes out of that mine. It doesn't matter how big this stack goes, I don't pay for any of that. So the mining company is under pressure, but the ounce of gold that comes out, like in the 20s, I mean, if you had 1% of the ounce of gold where this came, the mine this came out of, probably in Nevada in the US, because it has to come from the US, the 1 ounce of gold back then is the same as the 1 ounce today. So imagine getting 1% of gold when it was $20 and then getting 1% when it's thousands of dollars. And Charlotte, remember, the government likes inflation because taxes are a percentage. Taxes are a percent. Sales tax in the US. You buy a cup of coffee, it's $3, 7% sales tax, 21 cents. If the coffee goes to $4, that goes to 28 cents. The government just got a raise. Your 25% income tax. If you make 100 grand, make 110 grand, government just got 2,500 more dollars. But you don't notice it until it's too late. So the government likes prices to rise. Now, of course, they say, well, we don't want to rise too fast. I mean, that because then people will start throwing rocks at the Capitol. But the problem is that they're doing this. It's working so well that everybody's talking about inflation, but nobody's doing anything about it. So you have a window now to get positioned and to stop worrying about getting a tweet about the stock of the day and to start thinking about what am I going to do with my money?
Right. Okay. So you did tell me before we started this interview, inflation is the thing to watch right now. And I think that's such an interesting point. We're all talking about it. Very few people are doing anything about it. Do you think that's going to change as the Fed very slowly changes its narrative on inflation? I think we had Jerome Powell saying this week that maybe now is the time to retire the transitory story there. Do you think that's going to change anything?
Well, I think Jerome is a very fun guy, because if you get yourself a notepad and you write down everything Jerome told me, you'll notice that it tends to change a lot. I mean, Jerome says there is no inflation. Then Jerome says there's transitory inflation. Then Jerome says, well, the inflation's not So if you're always waiting for Jerome, you're going to be too late. And that's what you see in the media, is that by the time you're reading something, that they're telling you what to think about something, not only is it usually incorrect, it's too late. And so don't end up in that scenario. The problem now is this is very deceptive. I mean, if you put money into a bank in the US, maybe you're getting 0.5% interest rate. And then let's say the inflation's going up. They say it's 6%. I think it's 10. 10 is, if I go around and buy things locally, 10% is, I'll ask the merchant, are your costs going up? Yes. How much? Probably about 10%. You hear this all the time. So let's say it's 10% and you're getting 0.5% at the bank. That means you're losing 9.5%. So the game is, how long can we take 9.5% from you until you notice? How long? I mean, I own a lot of property. I just paid all the tax bills. The property assessments went up 10% on every property this year. I mean, I think the values went up by about 20% in reality, but the assessment went up by 10. That means my property taxes went up by 10%. Did my rent go up 10%? Maybe, but if it did, that means the cost for my tenant went up 10%. Maybe they got a raise for 10. You see how this goes? By the time you notice, it's too late. It's too late. And what do you want to own? I mean, gold probably at some point wakes up, takes out the old high, 2083, and makes a run to 2,300 to 2,500, somewhere in there. And people say, oh, okay, well, that doesn't do anything for me because that's only a few $100s. Right. But the value of that few $100s when you have a royalty is gigantic. Because remember, as this stack gets bigger over here, okay, you get that for 20 or 30 years. 20 or 30 years, a stack's going to get a lot bigger. I mean, if you have little children or grandchildren, by the time they're adults and in the system, probably the average person is going to make $1 million a year. I mean, or I'm sure they'll be being paid in Fed coin by then, and it'll be a whole different ballgame. But the point is that they will grow this stack until the system breaks and they'll introduce a new system. It's so obvious. I mean, the interest rates are never going to go up, ever, ever, ever. I mean, Charlotte, you've been okay. If you're in an emergency, if you're in a 13-year emergency, that's what we've been in. It's been a 13-year Federal Reserve money printing, zero interest rate emergency. If you have an emergency for 13 years, it's not an emergency anymore. It's not. It's like, it's just the way it is. That's just your everyday, your in and out situation. That's the scenario that we're in. So people have got to say to themselves, what if they never raise interest rates? They never stop, buying these bonds every month and managing the costs for everything. To get a mortgage is going to go lower and lower and lower. Okay. And the inflation is going to go higher and higher and higher. How long can they do that? And what do I want to own when everybody finally wakes up and realizes that's what's happening? That's the bigger question. Look, have some gold. Okay, good. In my book, I talk about how much gold, not that much. You don't need that much gold. Okay. But the royalty business is it's a catapult. When that move happens, the value created in the royalty business prices all that inflation in, and that's, to me, it's magic. I mean, it's really, really interesting. And that's why even when the market's down, you own royalties, you sleep like a baby. What else do you want to own? I mean, the movie theater chain is toast. Like, people already watch movies on their phone and at home, and you can pay $10 and get it streamed right in and not go to the theater at all. So, I mean, imagine all those square footage. You got to have all those handicap ramps. You got to have all those employees. It costs more and more and more. Somebody might catch, the coronavirus in there. It's a disaster. So, and that's the number one stock of this year. But okay, do you really want to own that? I mean, it's one thing to go see a movie and to have a good time and all this stuff. But do you really, if the music stopped today and somebody said you own 10 movie theaters in middle America and strip malls, or you own 20 years of 1% of everything that comes out of all these gold mines, 75 royalties, which one seems more low maintenance? I mean, the royalty is a mailbox money situation. I mean, you're not doing very much. There's 5 employees. You can't even run the AMC movie theater with 5 employees. I mean, you need 25 employees, right? And so I just think people have got to slow down, turn off their phone, take time to calm down and say to themselves, forget about what should I buy? What do I want to own? That's the question.
Yeah, and definitely when you lay it out like that, it makes sense how you're playing this situation. I want to go back to one thing you said, which is that the Fed won't be able to raise interest rates. This is definitely something that I've been bringing up with the people I'm speaking with. Does this schedule that they've laid out for the tapering and eventual rate rises next year make sense? Can you go into that a little bit more and tell us why it won't work out and what that could look like?
Well, I mean, this is somebody with imagine if you may have known someone with a terrible substance abuse problem, and they say, I promise I'm going to quit. First of the year, my New Year's resolution, no more booze. Okay. But, they're drinking all the time. That's what this is like. It's just, they're probably not going to quit. Okay. They just want to get you off their back. They say, give me a break, man. I'm having a hard time over here. That's what it sounds like to me. We're going to raise rates. There's a dot plot. We have our best team on it. We're trying to find the right time. We were going to do it, but then there was a virus. Now we're not going to do it. Now there's another virus. We don't want, not enough people are working. I mean, let me tell you something. The U.S., there's no staff. Okay. You go, like where I was for Thanksgiving, we try to eat and they say, we have tables, but we have no staff. So we can only seat you at 9 o'clock or something. Okay. So what these guys talk about full employment. I mean, there is no one else. I mean, it's unbelievable. So if you believe all these things they say, they're definitely going to raise them in the future. I think you're just going to be bamboozled the whole time. And imagine, Charlotte, imagine if you are a 70-year-old retired person and you saved up a couple $100,000 and you thought, I'll live off my savings. And imagine you're getting 0.5% interest on your couple $100,000 and you're losing 9.5% in inflation every year. And you're reading the newspaper and Jerome tells you, I'm definitely going to raise interest rates at some point soon. I mean, I can't say when, but pretty soon. It is the saddest thing to think about because that person is losing buying power by the minute. And the smart guys that we've entrusted the system to know that. And the small people, the retired guy, they just say, well, about the time they figure it out, they'll be dead anyway. So it doesn't matter. So that's what's going on. But it's a choice. It's a choice. If you want to wait until you're told what to do, that's one way to live. If you want to educate yourself, read my book, listen to how these things play out, you realize it's optional suffering. It's optional suffering to be drug addicted. It's optional suffering to have your wealth fleeced from you over the coming years. You don't have to do it.
Okay. And in this environment, I know that a lot of people really enjoy your price predictions for gold and silver in the past. Is that something we can do right now? It doesn't make sense to be predicting prices at the moment.
Yeah. So let's do something like that. So one thing to think about is we thought gold would keep running in August of 2020. We were surprised that it didn't go. And we were surprised also that if you look at the chart, it was smacked and then it would come back and then smack and then come back and then smack. It was a very frustrating pattern that's persisted. And at this point, it's difficult to know when it snaps through. But if you think about it, when it snaps through, where does it go then? Because if you look back, the gold chart looks fabulous if you go back to 2000. 2000 is when really all these things started up, like all this special interest rate policy and quantitative easing. It was the early days. It got crazy 2008 and on. But if you look back, like that's when it started. And if you look at the gold chart, you beat stocks. I mean, you've done fantastic. And the chart looks very healthy. It's the day-to-day that drives people mad. So there will be a point where gold breaks its trend and starts moving higher, takes out the old high, probably puts on a couple $100. And so when you think about it, that's for the intermediate term, that's what you're trading is to go from 1775, 1800 area up to the mid 2000s. Okay. But one thing we focus on too is silver. So Metallo Royalty, ticker symbol MTA, has about a third silver, which is very, very high. I mean, there's not many royalty companies with that much silver. And when we look at silver, silver is very unique because you had $50 in 1980, okay, 79, 80, that little run. And then you had $50 an ounce in 2011. And now you're sitting at $21 or $22 an ounce. And anybody that's got any experience in charting knows about a triple top. And so when it breaks a triple top, it typically goes flying higher. And so gold is where your wealth is. but silver is where your excitement is, because silver is the wild animal that tends to cut loose. Silver is not primarily produced. I mean, it's a byproduct mostly. There's not a lot of pure silver mining. There is some, but there's also a lot of silver as an ancillary metal that comes off of, copper or zinc or lead or some other production, and silver comes to market that way. So I think people have a window here to get positioned. I mean, when gold starts to make that move and major money comes into gold, you do not want to be chasing it. If you remember last year, the premiums on gold and silver got out of control. So now, I mean, you can call up the gold. I have all my gold dealers in the book. I list their phone numbers and everything. You call them up and you say, I want an ounce of gold. And you'd be surprised the premium is very low because nobody wants it. When that turns, the premiums get out of control, and it's not the time to be buying.
Okay, and just before we wrap up, it's always great to get your thoughts on what's going on in gold and silver, but I want to mention copper and nickel as well. These are some other metals that you're interested in, and they have to do more with the energy story. And I think maybe if you didn't notice what's going on with inflation, maybe you did notice this year some of the things that are happening with energy. Depending on where you live, you might have felt some of those things that are happening. So how has that impacted what you're doing? How are you playing this energy narrative?
Well, we talked about the gold royalty business and how it gives you decades of exposure, but copper is even more interesting. I mean, you have about 2% electric vehicles right now. They're talking about going to 50%, so 25 times as many. And every major electric car has about 100 pounds of copper, which is an unbelievable amount. I mean, it's more than double what's in a conventional car. And so the nickel story is even more interesting. The long range electric vehicles have tremendous nickel. It's the primary cost component of some of the battery packs. And so what we figured out was that the energy transition can't happen without gigantic amounts of copper. So we started a copper royalty company called Nova Royalty. It's NOVRF on the US and NOVR in Canada. And Nova Royalty takes those same royalty positions in the copper and nickel business. But also, Charlotte, since we last talked, we started a company that generates royalties on carbon offset credits, because this all goes together. So what's happening is, if a company can't get itself onto the new energy regulatory platform fast enough, they have to buy credits to offset carbon. And if you know Tesla's had a major source of revenue by selling credits to traditional car manufacturers. It's been one of the biggest sources of revenue they've had. So, I mean, the credit business is fascinating. But all of this is the same. It's the same blueprint. I want to own royalties on megatrends. I want to own 1% or 2% of all the production for decades and decades and decades, because every company has to lower its carbon footprint. And the ones that can't do it have to buy offset credits. And so what you can see is the price of those offset credits is rising dramatically. And the market's very fragmented. It's very early days. So all these companies go together, and it's a business that we're quite good at running. And so we've been able to start that same business in each of these trending markets. So you have Metalla, you have Nova Royalty, and then we have a carbon royalty will come public next year, and we can talk about it when it's closer.
Yeah, I look forward to hearing more about that. And as we finish up, I think the last question I have for you is your best advice for investors in 2022, especially maybe our precious metals investors. I read the comments here on our YouTube channel. I know people are getting a little bit dejected. So what would you say for next year?
Number one thing is, this is a time of year for reflection. And as you go into this holiday time, we talked about the tax loss behavior. You could do the opposite of what most people are doing, which is, I think, is great advice. But another thing you could do is try to have less time with electronics. If you notice, everybody is completely addicted to the phone. And what I love is seeing my friends looking down at their phone at a dating app while someone quite attractive walks right by them. And I think, why don't you just talk to them? It's just like, it's a joke about what's going on in the society, is that we miss all these things that are happening right in front of us. And then we're surprised that we miss everything in the market. But this is a time of year where you can put those devices down, spend time with people that are close to you in your life, having conversations, talking, spending personal time, remembering that we're human beings, we're biological creatures. These senses that we have, they're here to help us. And this is a time of year where you can focus and you can be calm and you can think about what happened this year and what you want to do next year. And the question becomes not what to buy, what to own.
Okay, I think that's a perfect place to wrap up. Thank you so much for coming on to talk once again.
Thanks for having me, Charlotte.
Of course. And I'm Charlotte McLeod with the Investing News Network, and this is EB Tucker.